All right, guys, here we go. Today we're going to do a quick little video on your trading insurance and why you should take out trading insurance whenever you put on a trade. Actually, before you even put that trade on, before you even get in the market, whether it's a long position or short position, you should already have in your mind that trading insurance and where you're going to put it on and what your losses, maximum loss is going to be, period. And why trading insurance? Well, you have insurance on your house. Even if you don't own a house, you rent an apartment or rent a house or something, you have renter's insurance. When you bought your house, probably before you even left the title office, you had a homeowner's insurance on your home in case something catastrophic happened. You wouldn't be at a total loss on that house. In most states, even buying a car, used car, whatever, you have to have, automobile insurance before you drive it off the lot. And, once you became an adult, left home, got your full-time job, started your life, what did you get? Yeah, health insurance, life insurance, that sort of thing, to protect your assets and your loved ones. So that brings us to your trading insurance, okay? And this is how we put it on. This is what we do and how we do it, okay? All right, right now we're looking at the SPY. Basically, it's the EFT for the S&P 500, okay? It's one of the most followed, charts out there. And as you can see here, currently we're on a little bit of an uptrend. I'm kind of getting off topic. I wanted to set this up properly for you. And we're hitting this, if you follow this red dashed line to the left, because everything that happens once the breakout starts, the breakdown is contingent on what has happened previously to the left. And as you can see, we're kind of bumping our heads, consolidating up here, right under this previous resistance and then support zone as we go through here. So high pivot here, rejection, finally got through it, came back, retested that breakout area, consolidation, held support here, bounce, came down through it, and then here we are presently, okay? So that should, be something that you watch out for as you trade either to the upside or downside on whatever asset you're dealing with, okay? Now, let's start from scratch here. Let's say we were going to take a position. Let's just go back here, and I'll set up the present day on this candle here. On our Patreon group, we tell you why this is a high percentage, high odds play on this candle right here. But once we get in, how we're going to set up our insurance policy. Okay, there's three ways we're going to do that. Number one, we are not going to lose more than, X dollars. Let's say it's, $80, okay? And if we started to drift down and get close to $75, then that would throw up some red flags and we'd have our finger on the mouse getting ready to get out, okay? Now, the only thing that messes insurance policy up, because it's up to you. This is a guaranteed, do not lose more than X dollar proposition. Okay, only you can mess it up. Only you can default on this insurance policy. Okay, this stop loss. And the reason being is that a lot of people, and the reason why I know this well, because early on I did it myself. Okay, you put your stop loss, your insurance policy at $80. It gets to 80 and you go, well, I heard this or saw that. This is going to happen. That's going to happen. And what's $20? Let's just make it an even 100. Okay, that we're willing to lose. Okay, it gets to 100. You're kind of feeling the pain a little bit, and you go, well, we have another moving average down here, or we have another, potential reverse down here. Let me just hold it to there. It's no way it can go down there. The next thing you know, you're down 150. Okay, because truth be told, your smallest loss is always going to be your first loss. Okay, period, in conversation. And then your mind starts playing games on you. I'm down 150. I can't lose that much. I'll just hold, until it turns around, and then next thing you know what, you're down 350 bucks. Okay, and then you're like a deer in the headlights. You freeze up. You feel like you've screwed up. Everything. Everything's a loss, and so you kind of give up. And next thing you know, man, you start up here and you're already down here, several hundred, maybe a couple of thousand down. So it's going to be your mental, what guarantees this insurance policy is your mental discipline and your ability to go in there and keep your word to yourself. Okay, that's one thing trading does. It brings out the best and worst in you. And if you can keep your word to yourself, you should be able to, survive and live to play the game another day. Okay. And then, as crazy as this sounds, okay, so there's the first insurance policy is, simply a dollar amount. And of course, the more money you have in, the higher, this amount could be that you could put as far as risk capital. Okay. But starting out, I don't know, it ought to be just my opinion, it ought to be under $100. Okay. Okay. The second insurance policy is 1/2 of the candle that you got in on. Do not lose, period, in a conversation, 1/2 of that candle. Okay. Well, let's say it's a big candle like this one, or even this breakout candle here. Either you use your fib line or just eyeball it. Okay, if price comes down in here, I'm not going to lose more than 1/2 of it. Like if you had gotten into this candle, you would have been out, pretty much right in here. Then you saw, continued downside. But you can always get back in because we don't know how far down this will go or how far it'll run to the upside. Okay, so right now, present day, if you'd gotten in on this candle here, which I don't know why you would have, because it's getting a little far and away from the 20. That's another, just give you a free tip here. The further away you are from the 20, the higher odds, higher probability that trade's not going to work out. You want to get in and around the 20 for your highest odds, higher probability that it's going to continue, to push either to the upside or downside, depending on the trend, obviously. But anyway, just say you got in on this candle here, that green candle, a few days ago, and here's your halfway mark, that green line. And if we start trading, especially if we close under that line, I would be out. Okay. And then the third insurance policy just gives you a little bit more slack. If it's a smaller candle, do not lose more than one full candle here. In other words, if this whole candle is wiped out, you're out. And generally, to be honest with you, generally that will happen within, the next day or two. It happens real quick. Okay, I'm trying to look at an example. Let's say this was, in and around the 20, and this green candle took out all this over here. So you say, hey, that might be a good one to get into. So you take a little position there. Then next day, not only goes past half of it, it wipes the whole thing out. And most people that lack self-esteem, that lack self, what am I thinking? Discipline, are going to come in here and go, well, it's going to bounce. I see this over here. They bought it up over here, so it's going to come down. Then it'll get bought out when we get, back in here. But guess what? That never happens. Okay, and then boom, you're down here, several hundred, several thousand, in the red. All right. So first loss always your smallest loss, and this is how you can break it down. But before the trade's even made, a lot of people, talk about positioning the trade. In other words, if this happens and you get in, well, actually, that should be the second thing that you do. So the first thing is knowing, are you going to have what's your dollar insurance policy, the most you're willing to risk or lose. And then, number two, you're going to do it, on the candle you got in on, either half of it or all of it. and then say, okay, if this closes a certain way, or this does, whatever your technique is, that's where I'll get in at that location. Okay, so yeah, I'll leave you with that, because a lot of people don't even think about their insurance policy, and how much they're going to lose until the trade's already going, and then they start worrying about it. Then you have mixed emotions, and then your emotions take over, and then your self discipline kind of wangs there for for a minute, and you start second guessing yourself. So that's why you need to have it written down. Look at it and just be, as unemotional. There's no way not to be completely 100%, like a robot, because you're dealing with money. So anyway, I'll leave you with that, and we will see you on the charts.